Now. Hello, everyone. This is Sergio Marrero, and we're here with another session of RBL1 Live. We have Wouter, who is the general partner at Born Capital. Thanks for joining us today, Wouter.
Thanks.
For those that don't know a little bit about Wouter's background, he's a serial entrepreneur and took his entrepreneurship into starting his own fund, but a graduate of Amsterdam University, also got his MBA from IESE and has been focused on being an investor in the fintech industry and highlighting CFO tech, which we'll learn more about today. So if you could share, Wouter, a little bit with the audience, what is Born Capital?
Sure. So Born Capital is a fund we recently closed November last year, investing in early stage technology companies, but with a very specific focus to software, emerging technology for the office of the CFO. So everything around accounting, everything around financial close, financial planning analysis, forecasting, but also expense management or subscription billing. It's quite wide, but it all has to be around finance. We call it CFO tech, but it doesn't necessarily only fit companies that have a CFO. It can also be, we have a solution for startups in our portfolio at the moment, but definitely focused on the finance function of a company or the wider finance function, including reporting on other elements, but at least led by finance.
Can you share a little bit more what sector and stage of company you look for?
So yeah, most of the companies we invest in are SaaS companies. So they're working with business models around subscription. We try to get in on a seed plus round. These two are the typical areas where we most like to invest. With pre-seed, you're tend to unproven, and we'd like actually to use our, me and my partners. I have 3 partners in the firm. We like to use our experience as entrepreneurs to kind of help the companies scale. And with, let's say, pre-seed deals, there's too little we can bring them at that stage. Although we see a really good pre-seed opportunity, company just raising the first check, we're always interested, but we like to stick to seed plus, and then potentially follow on till a Series A round. Not as lead anymore. Our fund size is too small for it.
And any particular geography of focus and size check you look to write?
So yeah, I guess we already focus on a pretty small niche of all tech companies. So geographically, we're really looking global. We do look at companies that at least have global aspirations. So when I say global, I'm not looking at a local player in Germany or in Australia or any country. It has to be companies serving a global market. We invest checks up to $1 million, ideally gradually. So if we get in a seed round, we might do $500,000 or $750,000, and then try to build up a little more while the company is getting more successful.
Excellent. And can you, would love to hear a little bit more about your story. How did you go from, did you always know you wanted to launch the Born Capital, or, can you share more about how you walked from being an entrepreneur yourself to launching your own fund?
Yeah, so I've been working roughly 20 years in the CFO tech space. I'm sure we can talk more about that, what that really means. But initially as consultant, then I co-founded CXO Software, a company that, funny enough, never took any funding, but we still built out a great business serving over 150 customers. Big companies like Facebook and Johnson Controls, Honeywell, were all using our software. So very enterprise focused. This company we sold to Inside Software in 2018, and I stayed for another year as their M&A manager. at Inside Software, and so basically acquiring other companies, and that's where I really got the experience with investing. Also, I saw the joy of, well, this was completely different kind of investments. We're mature companies who would buy, and of course 100% of their 100% ownership. So different than what I do now, but I did really started enjoying the investment side of the business. So I became an angel investor afterwards. I left Inside Software and moved from North Carolina to Barcelona, and started angel investing, and saw how much I could really help younger entrepreneurs not to make the same mistakes as I, at least help to prevent some of them, give them strategic advice, saw how much I appreciated it, and saw how much my capital would grow if I would invest it in the right companies. So having that done for probably 2 years, I thought, well, this might be a really good moment to start a fund. And in the end, it's a team sports, venture capital. At least that's what I believe. So I was lucky enough to find 3 really good partners to join me in the fund. I'm the full-time GP. They're all part-time involved, but we combine our experience. All other 3 have similar backgrounds, by the way. So I think we've had 5 exits together. We've invested a lot in startups together, and created a fund around it. It was early 21 that we started, and closed in November 21. It's kind of the story. I didn't always know that I wanted to do this, but I did know it after my M&A experience that I like more to invest, whether it's with knowledge or capital, more than operate again, become an operator again, because I've done that once. I've done it more than once, but at least with the big adventure of CXO, I've done that once. And I wanted to kind of start helping other companies reach that same success.
Excellent. And can you share, I know we sort of skipped over it, but want to dive deeper into the preview you gave on what is CFO tech? Like, how are you defining it? And how did you select it as your thesis of your fund?
It's basically, we created the category to start with. This is not a thing before. We try to get the word CFO tech adopted, and we work a lot with startups that all love it. So it's coming. It's coming.
And one of the questions I had in the beginning was like, does the startup, if I'm a startup working, pitching to Born Capital, do I need a CFO? Are you guys going to be a CFO? Like, understanding like how you work with startups as well.
Yeah, no, well, I don't expect a startup to have a CFO until they're Series B, C level. So no, definitely not. But for us, it's just the focus area around accounting, not ERP technologies itself, because that's too wide. That's typically too mature companies. But basically everything around it. So serving the office of the CFO, and there's a lot of interesting technology nowadays, emerging technology. AI can do great things in terms of automatically generated forecasts for companies, and there's so much to win actually with cloud technology that's still upcoming in this industry. There's much more. The CFO also moves much more to a role of chief data officer, and so it's where the data is within finance, and this is. So it's an interesting category, but most people consider it fintech. So why did we come up with something else? Because you could call it like enterprise fintech or B2B enterprise fintech, or that's how people like to talk around it, or accounting tech, FP&A tech. I've heard a lot of flavors. The CFO tech, how it differentiates from fintech is that the way I see, and many with me, fintech is actually technology for the financial services industry. Where CFO tech is not. It's technology for enterprises or mid-market companies that help them to actually run their finances better and create more value from the finance function. That's probably one of the biggest drivers, is that finance used to be a bean counter, and nowadays it's expected to be a strategic business partner, and help to move the organization forward on many different levels. The technology that is developed today is really a driver for them to get there. So it's in terms of enterprise software, it's a very important part of the operations of a company, the financial software to do it. And in some certain cases, it has some overlap with fintech. You know, if you get to accounts receivable solutions that also handle payments, for example, or stuff like that. You know, that's where you kind of see some hybrid. But most of it is quite easy to distinguish. You know, if it's a company, if it's a solution used internally by a company and not, you know, with any payment or financial services connected, I wouldn't call it fintech. I would call it CFO tech.
Excellent. And in figuring out or coming up with your, you know, that's how you defined it. What can you talk about some of the expertise and how you work with startups that you end up investing in?
Sure. Yeah, it's on several levels. I think first of all, me and my partners have just built companies and exited companies. So there's just a very basic entrepreneurial guidance we can give them and help in many ways. We've been in their shoes basically. So which also makes it probably different from many other bigger VC firms that you know have people that never operated. But for that we could have invested in any kind of market or industry. We have a deep understanding for what happens in the market, what CFOs need. For example, we've set up a CFO advisory board with 6 CFOs that advises on a deal-by-deal basis, but also help us doing webinars and thought leadership sessions. I'm creating a market guide at the moment for third generation FP&A tools together with an advisory board member. So we work closely with real CFOs, thought leaders in the area of FP&A, and we have, like all of us, 20-25 years experience in this market. We've seen every wave of technology coming by, and we understand very well where we are today, where the opportunities are. So we can help startups with go-to-market. We can even help them with a product roadmap. You know, what to build, what not, experiments to do or not. You know, like we work quite intense closely with the startups that want that. You know, some of them are just figuring it out on their own. That's fine too. But with some of our portfolio companies, we really have weekly calls or a board seat and try to help them very closely.
And you talked about waves of technology. In your any thoughts around how you see or are seeing or are not seeing blockchain and you know, crypto impacting the fintech industry? If you can share some of your, you know, your thoughts around that.
It's definitely impacting fintech. I think that's you know, one of the backbone technologies for fintech. If you put it back to CFO tech, do we see this inside enterprises? Do we see blockchain as a serious technology picking up? I think there are opportunities, but not so much on the crypto side, because there is currently not any cryptocurrency that is, I'd say, stable enough for enterprises to use it as a main form of payment. It's very much more in other parts of the tech space, but not so much within large corporates. You know, they still prefer dollars above anything else. But the blockchain technology itself is actually quite interesting because companies are looking for trustable ledgers for several things. You know, in the end, the CFO knows nothing more than maintaining a ledger and want that to be trustworthy. So the opportunities are actually great. For example, think about supply chain. If you have a whole supply chain of purchases, which again I would see as CFO tech because it's you know, it's financially driven, but you want to prove that actually, for example, you're 100% organic supplier and you want to prove that your whole supply chain uses organic products, or even for sustainability, for example, you know, you can use a blockchain technology to kind of prove without any chance to fake it, and that your whole supply chain fits whatever standard you want to sell to your customers. We haven't made an investment yet in blockchain, but we're looking at it. We're researching this topic, and we'd be very open to talk to a startup who can really apply this well to the Office of Finance, and for example, within supply chain.
Excellent. But besides the blockchain space, what are other areas that you're most excited about in the CFO tech arena?
Yeah, I think if we split it into two sections, one of it is very operationally driven. So financial close has to just be done correctly. There's not a lot of value to be created there, other than do it better, more error-free, and of course that's value, but not in terms of strategic value. If you look more on the FP&A, financial planning analysis software, this is much more a strategic area where you where actually the FP&A team is able to really make a difference on the bottom or even the top line of a large or mid-sized enterprise. And that's where I think that's a very interesting area. This is also a very booming area. There's been crazy rounds in the market happening recently with early stage startups, but already getting valued at $500 million, or not something for us in the end. We try to look careful on what fits in our portfolio, but we've seen actually this space is also outside our CFO tech focus as an investor. We see a lot of other big VCs jumping on this category to kind of be part of it, because maybe to give a good example, like 10 years ago or 20 years ago in the first wave of technology, this technology was developed for large enterprises. The only guys who could afford an Oracle system or Hyperion or IBM Team One were large enterprises and projects of $1 million and above. The second wave came much more to, can we run it in the cloud and bring the cost down? And there have been tons of examples there, like Anaplan or Adaptive. Now with the third generation, you actually see, we get into models of more self-service, online sales, no more prices going down a lot, instead of charging at least $100,000 a year, companies are now charging $10,000 a year. So they have created business models that actually work with this, that are much more suitable for lower mid-market and even SMB level. So what we see as a trend is that this enterprise set of features is coming down market. And there are much more companies that are competing, because this is in the end a much bigger market. There are much more SMEs out there than there are Fortune 500 companies. So it's a booming space. And you see the technology is all built around, can we take out a big chunk of the implementation cost? So can we use pre-built models that fit an organization or a certain industry? Can we use more like software that's documented out of the cell? Because by nature, we're talking about complex software that has tons of rules and typically require smart consultants to help you implement it. But there's this big trend of moving down market, lowering cost of acquisition for these companies, and like for the vendors, lowering cost of implementation for the customers, and providing immediate value, which is more required, I'd say, in the SME segment. But that's the biggest trend we see today, and it's quite exciting to see this market growing so fast.
Yeah, I'm definitely excited by those areas. I just finished a book called Loom Shots that talked about different types of innovation, and everybody gets excited about the SpaceX rockets or the kind of edge case new tech innovation, when a lot of value is created just by making things much more operationally efficient, large businesses and the like. So it seems like that's a strong area of your focus, which is exciting. It is exciting and needed to support. So I appreciate you. Can you share a little bit more also on your perspective? You're a global investor based in Europe. I know you guys are, Born Capital. Can you talk a little bit about like you choosing of your team and your headquarters, and how, what's some of the unique competitive advantage of being, I'm focused on the U.S. because I'm based U.S. investor, but also being in the European ecosystem.
Yeah, no, we have a global team. I have two partners in the Netherlands. I live in Spain. One lives in Pennsylvania. I'm I'm moving back to Atlanta, Georgia. That's where our headquarters is. So both from a limited partner perspective, we also have a global limited partner base of from UK all through Europe and US, Australia, and so on. But we also follow closely technology on multiple continents. So far, most of our investments have been in North America, but we are talking to a lot of companies based in Europe, and they're, especially in this space, CFO tech, their location is important. You cannot, let's say, especially if you're on the accounting side, every country has different regulations, different rules. So most of these companies don't start as global players. They start as being good in certain market, and from there start building out to other markets. So what for us is really interesting to see, okay, there is a company that got success in Europe, but likes to move to the US. And guess what? We have an office there, but we understand their local business as well. And so we can help them internationalize. It's also something that all of the founders have done before. We've been taking companies, set up multiple offices in the world. And this is something we can very specifically help them with. And those are also really good opportunities for us, where this help is required. In any case, we like to not compete with other venture capitalists. It's not that there's a hot company. It's like, hey, is it us? Is it going to be them? No, we like to be a value add investor that can help with a very specific problem. Don't have to be the lead, someone else could lead, but we are always looking, okay, how much value can we add to this specific company, and can we create some kind of success for them by supporting. In the end, they need to do it themselves. But global is an important aspect of our business, and I'm sure this year we will have multiple European investments as well. And kind of build out a great global portfolio.
Awesome. Well, Wouter, if you can, appreciate your time. If you would have any closing words, what's next for Born Capital?
Yeah, well, maybe if I can take 1 or 2 minutes more.
Yeah.
I think when I said before with FP&A, we are at the third wave of technology at the moment. And it's all about self-service models and sell digitally and implement lower cost, higher customer satisfaction, user-centric, etc. I think the fourth wave is all going to be interesting, and it's not really there yet, but it will be coming. All these systems are still relatively, I wouldn't say stupid, but it's all rules based. There's not a lot of AI actually in this space happening today. Well, it's actually a very suitable area for smart systems. Like, you can bring in AI in your forecasting algorithms. Everyone talks about it, no one does it. So there is, I think the third wave of technology where we're on right now is very interesting, but it's even more interesting to see what's coming now. And we're actively spotting companies there. We're doing research. We're even trying to help founders with an idea to kind of launch where we won't invest yet, but help them build their ideas out to kind of have something later on for us to invest into. So I expect the market to actually deliver, well, this kind of technology, I expect it to be able to deliver much more value even in the future. And that might be something for Fund 2 or Fund 3, where we're fully gonna focus on this technology, but I hope already that in Fund 1 we'll catch a couple of those. That's
exciting. It's like first step is operational efficiency. Next step is like the AI efficiency. Some folks I feel maybe even able to leapfrog, but we'll see as
maybe
we'll see how as it's implemented. So, but thank you for joining us, Wouter. And for everyone watching, our GP of Born Capital, and appreciate you joining us today and sharing your story. So thanks again.
Thank you too.